Hello and welcome. A wave of panic is jolting markets with steep drops in major stock indices and cryptocurrencies. This in turn fuels pressure on riskier assets, thus affecting the euro and the pound sterling. Yesterday, the European and British currencies suffered significant losses. Euro pairs managed to resume a downward trend, dragging the price to new weekly lows. The pound sterling entered a sideways channel. Its further movement will depend on today's data on UK retail sales. Yesterday's macroeconomic calendar included statistics on producer prices from Germany and inflation from the euro area. On the monthly basis, German producer prices rose by 5% in December. Eurozone consumer prices were in line with analyst expectations, which prevented the euro from gaining strong upside momentum in the first half of the day. Data on the US economy turned out to be rather upbeat. Amid the situation in stock markets and potential changes in the Fed's monetary policy, this fact enabled the greenback to strengthen. Today, market participants may take notice of data on retail sales from the UK. British retail sales are expected to slump in December. If the indicator turns out to be worse than predicted, the pound sterling will most likely extend losses. Besides, ECB President Christine Lagarde is set to speak today. However, her statement will hardly support the euro as she's unlikely to say anything new. The focus of traders will be on consumer confidence in the euro area and US Treasury Secretary Janet Yellen's speech. The consumer confidence indicator is anticipated to decline in January, and Yellen's comments on inflation may lead to higher gains in the US dollar. From a technical point of view, bears are taking the lead. The euro-dollar pair's further dynamics will largely depend on the market's reaction to the level of 1.1340. A false breakout at this mark will create a sell signal, thus dragging the pair down to the level of 1.1303. If the price fixes below this area, the volume of short position will increase further. In this case, the euro will most likely slide to 1.1273, 1.1248, and then 1.1224. If the price is able to consolidate above 1.1340, the euro will have a chance of recovering to 1.1368. If bulls manage to break above 1.1368, the euro will extend gains to 1.1398 and 1.1425. Of course, buyers will make every effort to protect the level of 1.1303. A false breakout at this mark will create a buy signal. Alternatively, it would be a wise decision to put off long position till the price reaches the level of 1.1273. Besides, it will be possible to buy the pair at 1.1248 on a rebound, counting on an intraday correction of 15-20 pips. As for the British currency, it's trading in a sideways channel. Today, much will depend on data on UK retail sales and the market's reaction to the level of 1.3574. If the price breaks through and fixes below this mark, the pound sterling will most likely slide to 1.3532 and 1.3496. This would mean a resumed bearish trend initiated last Friday. Long position can be considered only amid a false breakout at 1.3532 or on a rebound at 1.3496, with a view to catching an intraday correction of 25-30 pips. If the price hits a new weekly low and then returns to the level of 1.3574, a strong buy signal will be created. In this case, the pound-dollar pair will have a chance of approaching 1.3614. Consolidation above this mark will create an additional signal to open long position, and the price will return to 1.3656. At this level, I recommend opening short position on a rebound, counting on an intraday correction of 20-25 pips. In the event of buyers' subdued activity and a false breakout at 1.3614 following data on UK retail sales, a strong signal will add to downward pressure on the sterling. Good luck and have a nice weekend.